Hello, welcome to the programme. Is this the Lehman moment for crypto? That's the question some in the industry are now asking, as leading cryptocurrency exchange FTX faces bankruptcy after failing to secure a rescue from its rival Binance. Investors now face billions of dollars in losses. Just as the collapse of the Lehman Brothers investment bank in 2008 marked the start of a broader financial crisis, could the same thing now be happening to the trillion-dollar crypto market? Crypto values have slumped in the past few hours, with Bitcoin falling below $16,000. That's a level not seen for more than 2 years. From New York, Michelle Fleury reports.
Cryptocurrencies had already been having a bad year. Exactly a year ago, the value of Bitcoin hit its all-time high. Since then, it has lost more than 3/4 of its value. Now attention has turned to the crypto exchanges. Two companies had taken the lead in offering marketplaces where investors could buy and sell their holdings in crypto. One of them, FTX, had even set about rescuing a number of rival crypto companies when they got in trouble, making its CEO, Sam Bankman-Fried, into something of a celebrity. But it turns out that FTX's own finances were far from solid. A sudden departure of many investors from its market and a huge sell-off in its own cryptocurrency left FTX on the brink of collapse. Enter Binance, the biggest of all crypto exchanges. On Tuesday, it said it would be willing to take over the ailing FTX. But on Wednesday, it announced that it couldn't save FTX, all of which would appear to leave one of the biggest and high-profile crypto companies in ruins, and yet another dent in investors' faith in the cryptocurrency sector as a whole. Some within the industry referring to this as crypto's Lehman moment, a reference to the 2008 collapse of a large investment bank, which revealed the fragility of many financial institutions.
It's Michelle Fleury there in New York. Ed Price is principal at the consultants Ergo Intelligence and a former UK government official covering trade and finance. I asked him if the crisis in crypto is an issue for people who haven't invested in it, or should they assume it doesn't affect them?
To some degree, yes, they are correct. We've heard today that this is a Lehman moment for crypto. I think that's right. It's a Lehman moment for crypto. It's not necessarily a Lehman moment for anyone else in the economy. That said, it doesn't bode well if a financial institution, an exchange of that size, suddenly needs $8 billion. This kind of reflects the hidden leverage we saw in the UK financial system very recently. So I would say that there's some sense of concern in financial markets, in the financial system, but this is really a reckoning for crypto.
And just explain for us what a cryptocurrency exchange is, what it does, and why it's so important to that sector.
Right, well, it's starting to look like a crypto exchange is a bit of a Ponzi scheme, Ben, really. I think this is something that maybe we're starting to see now, and I don't use the term Ponzi scheme lightly. In theory, a crypto exchange is like any other exchange. It's somewhere that you can go and trade crypto assets, crypto coins, whatever you'd like to call them. And I think the real problem is that when people realized or thought that FTX was in trouble, we saw bank run-like behavior, that is people trying to get their funds out of FTX without success.
I mean, fans of cryptocurrencies will say that looking at one-off sharp moves like this is not the way you deal with cryptocurrencies. You have to take the long view. Is it possible to brush aside the fall that we've seen, Bitcoin, for example, falling below $16,000?
It's possible to do it if you are someone who really believes in and wants to hold cryptocurrency. That is, of course, your prerogative. And if that's your investment thesis, carry on buying it, carry on holding it. Take what I say with a pinch of salt, because I've been on record for a long time describing crypto in general as something that you really shouldn't touch at all. So I have an extreme view, others have another extreme view. But look, Bitcoin's been trending down. $16,000 is a long way from previous highs. And so while I don't expect to see Bitcoin hit zero anytime soon, I wouldn't be surprised if next year we meet again and Bitcoin has disappeared.
And how much is this connected with the wider economic picture we're seeing, for example, in the US and the rest of the world, where inflation is high, interest rates are rising? How does all of that connect?
I think that's a great question, Ben, because it does connect. And as the Fed decides that it's time to take demand out of the economy, that is to raised the interest rate, and we've seen 4 75 basis points hikes recently, and we'll probably see another one or a 50 basis point hike next time. Speculation also starts to leave the economy, leave the financial system. So in my mind, there's a straight line between the Fed saying, look, you can get a bit of a better deal if you just buy good old-fashioned treasuries, US debt. People look at that and say, well, maybe I don't want to be involved as much in what is in essence speculation.